Welcome back to Product and Healthtech, a community for health tech product leaders by product leaders. I'm Ian Harris, President and CEO of Vinyl. Continuing our series of talks with health tech investors, today's guest is Matt Miller, Managing Director of United Healthcare Accelerator out of Minneapolis. Matt is also the Managing Director of Headwater Ventures, an early-stage health tech fund. Matt gives us insight into what he looks for in a new health tech venture, what they look for in a founder, and what opportunities exist for partnering with large incumbents in the space. Let's jump right in. Matt, how you doing today?
Doing really well. How are you?
Good. I'm doing all right. Yeah, I'm doing really good. We're
Good.
getting to the end of the school year here, and so I'm looking forward to summer starting and having
Yeah.
a little bit of vacation. I know you've got a new one, right? You've got a new little one.
We do.
How are you hanging in?
By a thread. We've got a 2-year-old and a 2.5-month-old. So school year's not a thing, but Minnesota winters are long and sleep is short these days.
Well, I'm glad that you found the time. You got yourself some coffee and got yourself woke up enough.
Yeah. I will drink throughout. So thank you in advance for humoring. Good to see you.
I love it. So today I thought it would be great if we started, if you could just give us, sort of the quick rundown of your background, where you came from, sort of how you got to where you are today.
Yeah, happy to. And maybe I'll give the high level. And if you want more details, you let me know. So very non-linear career. Initially trained sociology, theology, thought I was going to go to med school or be a pastor. Chose to be a wilderness guide instead for many years.
Nice.
Found my way to grad school, spent 12 years racking up student loans, ended up with a few masters and a doctorate, and then started building companies. And my training was all primarily in mental health at the graduate level. And so the companies were primarily focused in mental health meets technology in some capacity. Most of them tended to be pretty terrible ideas that were passion projects of mine that I thought the world needed. And maybe the idea was great, and I'm just a terrible operator or some combination of the two. But there's no great success story there. And I ended up finding my way to Johnson & Johnson, where I helped build digital health innovations internally for a number of years. And then fast forward 4 years ago, I heard from an entity called Techstars. And Techstars is one of the largest seed stage investors in the world, and they were looking for somebody to help them start a healthcare practice. And so joined forces there, sponsored and was the managing director of a digital health accelerator in collaboration with United Healthcare. We did that for 3 years. I actually now do that work independently, so I've continued that capacity with them.
Still
and then
United Health, right?
Yep, correct. And actually not as an employee of, but a consultant of, and then the managing director of the program.
Can you tell us a little bit more about the United Health Accelerator and sort of, I know it started out with Techstars and now it's a separate entity, but can you tell us a little bit more about that? How many cohorts have you put through? What's the program look like? Maybe.
Yeah, certainly. Yeah, happy to. So this is year 4. We do 1 class a year, 10 companies per class. We run it every year in the fall. When we started with Techstars as a model tends to work really well for pre-seed or very early seed stage startups. The program structure has an economic component with participation. It tends to be like a very intensive all day, everyday thing. It's very hands-on from an expert advice, mentorship, and programming curriculum instruction level. And so if you're pre-seed, it's kind of perfect for you. It's game-changing. We would have 10 companies come in. They'd stay with us all day, every day for 3 months at a time. And then at the end, we'd throw a party to celebrate the accomplishment. And hopefully they had grown a year or two in terms of like actual company maturation during that period. And either set themselves up for success with commercialization with United or with other entities, really just like whatever business trajectory that their company took as a result. This year, we've distilled some of the learnings from it. And so the program is very much same, but different, if that's a fair thing to describe it as. What I mean by that is it's still hand in hand with United Healthcare. It's still specifically focused on serving some of their strategic innovation agenda by targeting early technology companies. But we're going after companies that are a bit later stage, companies that have already built a product. They've already got it in market. So they've already gone through procurement and implementation and otherwise in contracting. They have a customer. right? And we don't really care about revenue necessarily, but there are so many pains associated with going live in someone else's environment, particularly in healthcare, that we're looking for companies that had already done that once. Companies that fit that profile have often already raised a seed round too. They often have a team that they've hired. So there was a core team, and then they've added some talent on product and technology and sales and operations or customer success or otherwise. It's that profile that we're looking for now. And as a result of that profile, we've changed the program to reflect it. So the program is less curriculum and instruction. It's less me teaching you, cap table 101, financial modeling 101. Like those things aren't necessarily as relevant. It's instead a lot of cohort oriented interaction where you get to spend time with other world-class founders, learning directly from them. And then it's a lot of closed door sessions with senior executives at United where you can ask them anything about their strategy, things that you can never Google. It's part-time. We give every company that participates a $50,000 investment on an uncapped safe. So terms that no one would say no to, right? Yeah. And then, curated access to the C-suite of one of the biggest health companies in the world. So from a founder standpoint, it's a pretty profound opportunity to spend time with a core team, with a core group of other founders that are building things at similar stages that are non-competitive with your own. Right. And then again, access to United and all their resources.
Looking at some of the companies that you have coming through and maybe in years past and then into this year, are there certain, from a product standpoint or a solution standpoint, right, or an opportunity standpoint, are there certain trends that you're seeing? Are there certain areas that you think are really ripe for innovation and really, really need new companies and new products to be born to address, existing issues?
Yeah. The trick in answering that question is, so like my job is really to partner with United and like the multitude of business lines that are encompassed therein, right? Like they do everything.
Just a small company, right?
Right. I mean, it's so much easier to say what we're not interested in. Right? Yeah. We don't do anything in biotech, life science, med tech, med device, pharma. But from like a healthcare landscape standpoint, there's still a lot of area. Like even if you've ruled out those sectors, right, just about everything else is in play. And then product lines that could sit within specific use cases. We do anything that is obviously payer facing, but also anything that's provider facing, anything that's patient facing. We're focused on a lot of things that are caregiver oriented or family oriented as well. We're looking at white space opportunities. Like the big focus behind the program is find something that's net new, not like small iterative progress. And what that means, like, if I'm really crude about it, it's like, we're probably not going to pick a diabetes company. From an innovation standpoint, it's sort of been there, done that. And if there are people that are new, they're incremental new, they're not net new. And so are there areas where we haven't had modern startups come in, modern products come in and really address an experience that's otherwise terrible? We're looking for like the way that we filter what we're interested in is, we spend a lot of time with senior executives, asking them where they need help. We spend a lot of time with people on the policy and regulatory and reimbursement sides, trying to think about where there are tailwinds in the market, meaning like, do we have justification for investing in this space in this point in time? Because there are actually things that will propel it forward where in any year prior, it wouldn't have made sense, right? And then the third layer that we put on this, it's this heuristic of like, where is the current patient experience terrible? Or maybe it's not a patient. Maybe where's the current provider experience really terrible?
Caregiver experience even.
Where is the experience where the caregiver or the family member or the whoever it may be? And is it bad enough, or does it have a long enough tenure associated with it, or like does it happen in aggregate in like critical mass at a large enough scale that we think we can get some senior executives across United's lines of business?
Well, then solving it makes a whole lot. I mean, you want to solve every problem, but right, is this a problem that really needs to be addressed?
Totally.
And, financial sense, right?
Totally, yeah. And so it doesn't need to win the day for 100 million Americans if it's something that's a really protracted issue that also has a lot of like complications or costs or otherwise associated with it, right? So I'm looking for things that I can come up with a compelling enough narrative that I can go talk to a bunch of senior leaders and get them excited enough that then they're willing to volunteer on behalf of a founder. And then they raise their hand and say, yeah, I'm going to be a mentor to this company and I will give them an unfair competitive advantage. I won't give them a contract, right? They will earn that, and they may or may not, right? That's how the market works. But I will open my brain, my strategy, our processes. I'll open my Rolodex. I'll open all of my years of experience on their behalf to ensure that like they don't make mistakes. And in doing so, they will be able to just exponentially level up their business and its probability of success. That's why, from a founder standpoint, I just love the work, because it can be truly game-changing for founders.
So how do you find companies? How do you find these founders? How do you find ideas?
It's a hogwash. I should have more structure to it. It's a little bit of everything. We're in year 4, and that's nice, right? Year 1, it was hard. We had to go anywhere and everywhere. We did a whole host of traveling. We went to every conference that was industry oriented, trade oriented, tech oriented, academic oriented, otherwise. We begged, borrowed, stealed. We asked for favors. We found companies that were good fits, and then we asked them who else we should pick, right, to try and sort of snowball the prospective pool. And then we did our first year, and we had founders who went through it who had a good experience, who then started recommending to us. We also had investors who invested in companies after they graduated from our program, who then started referring companies to us, the investor would say, this is a company I'm really keen on, but I need you to de-risk a portion of this.
Yeah.
But I think they're viable. So I'd like to send them to you. If you took them in the program, you could expedite the growth, further de-risk the business, and then I could invest on the back end. So we started building these interesting synergies with the broader capital markets. And now we have a collection of investor referral, alumni referral, broader market referral. It sort of propels itself in a way that, like, truthfully, my job has never been easier. We get so much inbound that now the job is, it's not just noise. There's an immense amount of signal in here. And now we have to say no to companies that are actually like world-class that we're crazy to say no to. Right. So we're in a privileged position, and maybe we'll reassess. Maybe there's a future where we don't take 10 a class, we take 12, or maybe we run it a couple of times a year. Maybe we account for that supply in some other way. But right now, that tends to be the mechanism that we use to figure out who's in the prospect pool. And then every year, truthfully, we'll get 1 or 2 companies that are just cold inbound, where we have a website. It's uhcaccelerator.com. We hold a few AMAs that we push out publicly. We want to make sure that, and I should be able to say this more articulately, so roll with me. But the solutions to the problems in healthcare are going to come from people that look differently and think differently and have had different lived experiences than the people who built the current system. And so what that means is we have an obligation to find those people, whoever.
There have to be a lot of open doors, right?
Yeah. And so, but that means that it can't.
And even then, you have to go out and find folks that can refer other people to you, expand your network beyond just who you already know. I think that's totally true.
We get a lot of inbound referral from sort of like the insider club. And we also read every single application that comes from the broader market, knowing that there are gems out there, and also just wanting to level access. So this is as level as a playing field as we can make it.
So can you tell me about some of the companies that have gone through? Can you give me some examples of interesting companies that?
Oh, I'm going to make enemies if I don't talk about some more than others. So let me talk about the most recent cohort. And I can just riff on a few of the ideas that are in there. And then if there are any that strike you, we can double click. So we had a company that they have software that measures stress and strong emotions in adults that have cognitive disabilities or intellectual disabilities, to try and get ahead of potential incidents where, if you're a fully grown man that has a brain injury that's nonverbal and is getting agitated and stressed, you're potentially a danger to yourself, to your family, to your caregivers, et cetera, unless we could give you a voice and then enable your care team to intervene earlier. We went pretty hard on the thesis that health benefits will be portable at some point in the future. Historically, it's made so much sense. And I'm sure other people that are smarter than me would argue with this, but from my perspective, historically, it's made sense to tie those to employment, because at least historically, you picked a job and you worked it for 40 years and then you got the pension and retired. But with current employment trends and the idea that, oh, I'm here for 12 months and then there for 24 months and then here for 8 months and then whatever, and lags in between. And I say this with like very ripe bitterness because I'm trying to enroll my family on Cobra today. The idea that we could decouple your benefits from your employment structure and go after ICRAs, it is the way of the future. Benefits will be portable and they will be much more personalized than the current constructs that employers are able to offer. We had a pretty straightforward one that just for me makes common sense. It's last mile medication delivery to ensure that people have access to meds and an easier opportunity to be adherent to them. Yeah, I mean, the list goes on, but sort of opportunities across the board. The common theme is a world-class founder. And what I mean by that is somebody that's smarter than I am, that I have the utmost of respect for because of the integrity that they bring to their work. Somebody that has so much leadership and vision and like dynamism about them. And not to say that they can't be introverted or otherwise, like we have all sorts of different types of CEOs, but they have the profile that commands the opportunity that they're pursuing. And as a result, it's somebody that I'd be willing to work for. It's actually one of my check boxes of like, would I work for you?
Yeah.
And if so, you're an incredible candidate for this. And then I need to make sure that they have a nicely well-rounded team, whatever that means within their construct. We're looking oftentimes for teams that have like product savvy internal, technical savvy internally. We can teach the healthcare side. So if you're a little bit light there, that's okay. But like the rest of the nuts and bolts of your business need to be in place. And then truthfully, because we know that healthcare is so complicated, which is like a pretty cliche thing to say, but what I mean by it is like, if you're a founder, it's probably the dumbest place to have picked to innovate. There's just like, there's so many like stupid, inane, bureaucratic sales cycles that don't align with funding cycles. Like you are screwed from day one. And as a result, you need to have like an immeasurable pain tolerance, which means you shouldn't be in this for a buck. You shouldn't be in it for the glory or anything. Like you should actually pick your business, tackling a real problem in the world that matters to you. And if you don't, it's not that you need to have experienced it yourself necessarily, but there needs to be some core identity to the company that then also aligns with the vision that gives us confidence that you're not going to quit. And if you don't have that, if there's not a compelling, like why us story, meaning like founder product, founder market fit, we don't take a second nights. And it's just because we've seen so many companies with the best of intentions realize that building in healthcare is a terrible idea. Right. And it like, yeah, it's just running into a brick wall constantly. And so we want to make sure that the folks that we end up pouring a lot of time, energy, resources, expertise, et cetera, into, we want to make sure that they're in it for the long haul.
So what about the product and the idea? How do you think about that when a company comes to you, especially at an earlier stage, right? Or how hard are you looking at something like your idea of product market fit, or the idea as it's presented to you, or are you looking at sort of the broader space, right, and your context and thinking, well, okay, this isn't exactly right, but I think that there might be a bigger opportunity for this person, in the space as you see it. I mean, how do you look at that?
Yeah, that's a great question. My answer is sloppy because it's a little bit of all of those things. And without sounding arrogant, I will tell you that most of the companies that we meet are wrong. Like they've made a bunch of assumptions around something. And it's not to say that they didn't have the best of intentions and actually do the homework on their side, but like a lot of healthcare, particularly like the internal economic intricacies of a payer landscape, are so wildly complicated. And as you get into
come from that, right? If you're coming at it from a different
angle. Yeah, unless you have a key advisor who is like moving mountains to teach you, or if you have personal expertise either in yourself or like a core founding member on the team, there's a lot of this stuff that you just can't know. And so most of the teams that we pick, and I didn't intentionally omit this earlier, but most of the teams that we pick also have a pretty high degree of coachability, meaning that they're not defensive when you sit them down and say like, hey, I think there's a different opportunity here, or like, I think you're a bit off course. They revel in that because they recognize that like now is the time to get that feedback, right? Versus 3-4 years from now, when you've overcapitalized the business and you've overbuilt the product solution, whatever it may be, on those core assumptions that may not actually align with market realities. So that wasn't an answer to your question, but just like
I think it is to some extent. I think what you're saying, and maybe it's not, you correct me if I'm wrong, but I think what you're saying is that it's important that they have a product idea and a vision that broadly you think is interesting, and that there's a there, but that it's more important that in addition to that they're very coachable, and that they're willing to try different things, to hear different types of feedback, to learn things, and then to incorporate what they're learning into their company as they continue to build it. Right. And that's
So in this upcoming cohort, which is the new model, right? It's like same but different. This is the part-time, slightly longer one where we target slightly later stage companies. Those companies, we tend to take the product component of diligence much more seriously.
They're further along. There's more to know, right?
They have to be. Yeah. They have to have something that we can push against. Right? They have a product in market. And so we'll do customer discovery. Like we'll do customer interviews. We will download the app and review it, and we'll put it in front of subject matter experts. We'll also put it in front of people that are technically proficient in the space. And what we're looking for is it special? Like, is what they are onto actually, back to that net new idea? Like, is there a there here, a there, however we would say it, right? In a way that gives this team some sort of interesting insight, interesting place in the market in the midst of like all of this noise. Is it something that's not easy to replicate? Like there's something proprietary, there's something defensible about it. From United's standpoint, and I don't have permission to speak on their behalf, so we'll have to like dance around some of these framings, but I can tell you pretty consistently, I hear senior executives talk about the importance of the member experience, end user experience, the patient experience, and recognizing that many of the ways that current healthcare journeys are constructed, like the experience of the patient is an afterthought. And so if you as a product team, you as an entrepreneur are building something with that patient experience top of mind, and as a result, and like I want to layer in here, I'm not a designer and I've been adjacent to product development for the past couple of decades, but like I'm not great at it. So what I would look at is not a review of the product myself as if I'm some sort of expert in that space. I would look for data to tell the story that you actually implemented that level of thoughtfulness about whoever your end user is. And it would be an NPS and engagement metrics and churn metrics and whatever metrics that matter relevant to the patient journey. It's not necessarily like everyone needs to have a daily active or monthly active, because that's not necessarily relevant for
the right metric for them. Anyway.
Right. Yeah. Right. But like we want to really dig into like what's the onboarding experience and where are you losing people, and do they churn? Yes, no. And like what are your acquisition channels, and are those scalable? And at the end of the day, can you scale them and still delight the end user? And if so, you have something that's profoundly valuable in healthcare that many of the current incumbents haven't yet figured out.
Yeah.
So that's how we think about product when we're looking at prospects.
Yeah, I think there's a lot right there. We talk to companies all the time, obviously within our business, and I talk to startups that are pitching us. And one thing that I think is interesting in healthcare is that, as you said, daily active users or, time in the app or whatever, some of that might not make any sense at all. In fact, you might have a service that's very valuable, that the experience has to be great, that people use only when they're sick, like when they're getting certain types of medication, right?
Yeah.
They might use it once a month or twice a year, but that experience has to be like great. They have to get everything out of it that they need to get out of it. And, if you're looking at even like a big payer or something, right? Maybe they need to be able to self-serve themselves, right? Without having to get on the phone and, spend an hour of somebody's time, navigating through something that's difficult, right? It's like, there's a lot of other metrics that they need to look at to see how it's delighting the customer, not just are they spending lots of time in the app? Because in fact, spending lots of time in an app could be bad. In some
it could be the antithesis of the business, right? Yeah. If your app is predisposed to set people up for a health trajectory, they should be spending less time in it over time, which is now a really complicated proposition to integrate into like a business model
Right.
to like sort that. But yeah, it is very much like a review of the data associated with the product, like directly in the vein of like, what is the thing supposed to do? And then does the data reflect like whether or not people
From
do
both a
that?
health outcome standpoint and an economic standpoint, those two things.
Absolutely.
Yeah.
Yeah, absolutely.
So in addition to running the accelerator with United Health, you're also an early stage investor. You're making investments in companies. Full disclosure, we invested alongside you with your first fund with Headwater Ventures, which looks really promising. And I know that you're continuing to do that. Tell us a little bit more about it.
So I get an opportunity to invest alongside the work that I do with the accelerator program. Just a little bit of backstory on it. So I started angel investing, and people use that word pretty loosely. I don't have a trust fund. I don't come from wealth. I didn't inherit anything. I've never been paid overly well. And so many of those checks have been pretty small, like pretty humble checks, $1,000, $5,000, $10,000. And I found a lot of satisfaction putting money into companies that fit the same sort of thesis and heuristic that I use for the program, which is like solving a real problem with incredibly competent founders, world-class team, net new opportunity on the market, and at the earliest of stages, meaning, price per share will never be cheaper. And so some people would look at that and say, well, that's risky. And it is. And it's risky. It's highly illiquid. It's a tricky asset class. Like you wouldn't want to be overly exposed to it. I would also consider it a form of value investing. Because of the way that I'm able to de-risk those opportunities relative to my understanding of the market and the introductions that I can make and the advice and counsel I can give to the founders to give them an unfair advantage, shares will never be cheaper. And I'm not going to come in and save the day for any of these companies. Like they're doing fine on their own, but I'm looking for companies that are clearly solving problems that are also spaces that I'm passionate about, that I can add value. Yeah. And I do so alongside adding some dollars so that they have more cash to put to work. I started doing it a number of years ago, 10 years ago or so. And I found it more satisfying than owning Apple stock.
Yeah.
I found it more satisfying than owning the S&P. I just, life is short. There are only so many things you can do with your money. And even though, like, full disclosure, I own Apple stock and the S&P, there was something that was really extremely satisfying about this process of putting money to work and being a part of the early story of some of the most important companies in healthcare, or at least companies that have the potential to be the future's most important companies in healthcare. I found it compelling enough that I set a goal for myself. And the goal was initially 1 a quarter. And it was don't change your risk threshold. Don't change what you're willing to have tolerance for or not. Like, be pretty firm in who you're looking for and the type of round you would come in at, and like the type of differentiated technology or product or otherwise that are actually investable. But spend enough time in those environments around people that are doing those things so that you have enough volume so that you could do 1 a quarter. And it worked. And so I set a higher bar, and it was 1 a month. And for the past 5 years, I've done 1 a month, every month. And a year and a half ago, my wife told me to knock it off.
Right. Yeah.
Because I work for a public benefit corporation, and like we've had some exits and it's gone quite well actually, but it's a fair amount of our investable income is tied up in assets that may be illiquid for a decade. And so she said, we need to, like, for our family's sake and the potential stress of family economics and finances, we need to rethink this model. Consider doing a pooled investment vehicle instead, right? Still put some of our family money in, but consider raising money from outside parties like yourself. Put together a small pool, find a way to do it creatively where it's still the same types of founders, and again, capital from us, but like less of a burden on family finances.
Yeah.
And so Headwater Ventures was born, and we're now a year or so into that. The thesis behind Headwater Ventures is technology that increases access to care. So back to some of those similar themes that we've covered, people whose current experience of care is complicated or crappy, or it's non-existent. We're looking for founders who have scalable solutions that can address those unmet needs, and looking for them at the earliest of stages where shares are reasonably priced. particularly relative to some of the froth that exists in the market at Series A, B, C, beyond. Like that's not for us. Like we'll never be able to play there. We raised and deployed a fund this past year. We put it into 17 companies, all pre-seed or seed, all doing something novel in healthcare for people, all solving real problems. The fund is going to evolve, and I'll actually have to leave it sort of TBD right now, but Fund 2 will have a startup studio. It'll be a little bit larger in scale. There's going to be some additional partners that are brought in. It may have a different name as well. So a few details that are in flux, but the same themes will persist of, the brightest founders at the earliest of stages. And from my side, and I don't know if this is terribly relevant for this podcast, but there's a lot of money out there, right? There are a lot of people that wear the venture hat out there. There are a lot of people even in healthcare. And so if you are an investable founder, it's fairly easy for you to find capital. Like sort of the cornerstone that we're trying to anchor this thing on is that a portion of our competitive advantage is compassion. Meaning that we've built companies and I've built them abysmally. And so get a sense of how hard it is versus an investor that maybe comes in with some braggadocio or some hubris or otherwise. Like this is very much a friend of founder mentality. It's still also very much a venture returns mentality, but one in which we're partners on a journey versus bosses of the founders, which is a perspective that many investors, I think, get misaligned too.
Matt, it's been so wonderful to have you here. Thanks for sharing your stories and your perspective with us. If some of our folks watching or listening want to get in touch with you, either about investment or for the United Health Accelerator, how can they do that?
Yeah. Well, first, huge privilege to see you and to be a guest here. So thanks for having me. Anybody who feels like this resonates, I would love to know them. Truthfully. So find me on LinkedIn. If you're interested in the accelerator specifically, there's a lot more detail at uhcaccelerator.com. There's a contact us form there that doesn't go to a robot, it goes to me. So if you got questions about the program after you've read through the details there, fill out that form and I'll see it same day, or at least same business day. And then in terms of investing, if you feel like you're a good fit for the fund, just shoot me an email directly. My email is matt@headwater.vc. matt@headwater.vc. So any of those avenues are appropriate.
Awesome. Thank you so much for spending your time with us. I appreciate it.
Happy to. Cheers.
Thank you so much for joining us. If you liked the show, drop us a rating on Apple, Spotify, or wherever it is that you're listening. We would really appreciate it. You can also connect with us on LinkedIn, on YouTube, or on our website, productinhealthtech.com. If you have ideas or suggestions for what you'd like to hear on a future episode, or if you'd like to be a guest, just shoot us an email. That's info@productinhealthtech.com. Thanks so much.